Hey everyone, welcome back to Corporate Decoder. Today we're diving into a proxy statement from Bank United. And let me tell you, it's got some interesting tidbits. We're not just looking at routine stuff. We're going to decode some executive compensation, talk about diversity, and maybe find out if everything is as sunny as it seems in Miami Lakes. It's like being a fly on the wall, but instead of a wall, it's a boardroom. Let's get started. First off, this is their notice for the annual shareholder meeting happening in May. Shareholders get to vote on a few things, including who gets to be on the board of directors and whether they think the company's accountants are doing a good job. Also, and this is always a big one, there's an advisory vote on how much the top executives are getting paid. The first proposal is about electing directors. Bank United has 9 director spots to fill, and they've nominated the same 9 people who are already serving. The proxy statement gives some background on each nominee. The board wants people with character, integrity, relevant experience, leadership skills, and a willingness to commit time to the company's affairs. They also want some diversity of background and experience. Looking at the nominees, there's Rajinder Singh, the chairman, president, and CEO, so he's obviously not independent. Then you've got folks from commercial real estate, banking, healthcare, and even a non-profit organization. A few of them have experience serving on other companies' boards, and most of them are considered independent, meaning they don't have any business ties to Bank United outside of their director role. Rajinder Singh has been with the company forever, climbed the ranks. Tia Blanca is in commercial real estate. John DiGiacomo is a banking accounting guy. Michael Dowling is in healthcare. Douglas Pauls has a lot of banking accounting experience. William Rubenstein comes from a legal background. Jermaine Smith-Baugh is in the non-profit world. Sanjeev Subti knows finance and capital markets. And Lynn Wyans is experienced in banking. Now, let's talk a bit about how Bank United runs things behind the scenes, corporate governance. The document states the board oversees managing the business and making sure it meets its goals. It makes sure the executives are performing, sets the company's risk tolerance, and acts as an advisor to the executive team. Most of Bank United's directors are independent. The rules say that most board members need to be independent. This means they don't have a material relationship with the company. The board reviews this every year, looking at all sorts of criteria to make sure these directors really are independent voices. Risk management is a big deal, as it should be. The board oversees a 3 lines of defense risk management framework. There are key documents like the risk appetite statement, which defines how much risk the company is willing to take, and the enterprise risk management framework. Bank United talks to its shareholders throughout the year, not just when it's time to vote. They participate in investor conferences and hold meetings with shareholders. This year, they reached out to a number of big investors to get feedback on their executive compensation and governance. It sounds like shareholders generally support their approach, but they did suggest some clearer explanations of how pay decisions are made. A lot of companies are talking ESG, environmental, social, and governance. The board, through one of its committees, keeps an eye on these issues. They are particularly concerned about weather event-related risks like hurricanes. The company has a sustainability finance practice with nearly $1 billion loans for things like renewable energy, clean transportation, and energy efficiency. How much are the directors getting paid? Here's a peek behind the curtain. Non-employee directors get an annual cash retainer, which is a base payment for their service. They get extra money for being chair of important committees like the audit or risk committees. Okay, let's get into some numbers. Each non-employee director got $70,000 for their service in 2024. The chairs of the audit and risk committees got an extra $60,000, and other committee members got $25,000 on top of that. Sanjeev Sobti, as the audit committee chair, made the most, $155,000. Then, in addition to the cash, directors get stock awards. On May 15, 2024, they got stock worth about $70,000 each. Douglas Pauls, the lead independent director, got an extra chunk of stock for his extra duties. The next proposal is pretty straightforward. Ratify or approve the selection of Deloitte & Touche as the company's independent accounting firm for 2025. This is standard practice. The audit committee has already picked Deloitte, but they want shareholders to weigh in. The audit committee is in charge of making sure the company's financial reports are accurate. They oversee the work of the independent auditors Deloitte and Touche, and they make sure they're independent directors with financial expertise. How much did they pay the auditors? The company paid Deloitte $21 million in 2024, mostly for audit services. Let's meet the executive team. Rajinder Singh, the big boss. Leslie Lunak, the chief financial officer. Thomas Cornish, the chief operating officer. Rishi Bansal, the chief investment officer. Jay Richards, the chief risk officer. And Kevin Malcolm, the general counsel. Now we get to the juicy part, how much the executives get paid. This is where the rubber meets the road and the numbers can really tell a story. The document outlines their compensation philosophy, pay for performance. The company wants to link executive pay to how well the company does for shareholders, and the claim they are trying to avoid incentivizing excessive risk-taking. The company is doing pretty well. For 2024, BankUnited reported net income of $232.5 million or 3.8 per diluted share. They are really pushing that. Their metrics are improving throughout the year, steadily increasing over previous quarters. They had improvement in their IDR, non-interest bearing demand deposits, non-broker deposits, core C&I and career loan portfolio segments. This document also states that company is complying with all risk appetite statement limits. There were no material weaknesses or significant deficiencies in internal controls over financial reporting. So what metrics do they use? A big chunk is based on a ratio of non-interest bearing demand deposits to total deposits, with some weight assigned for the wholesale funding ratio and for relative non-performing asset ratio. Finally, the compensation committee has to approve 25% of AIP, so there's a strategic component in there that is not purely numbers based, but rather the view of the committee. Last but not least, there's the CEO pay ratio. This is how much the CEO makes compared to the median employee. For BankUnited, the CEO made about 63 times what the median employee made. And wrapping up, if you want to submit a proposal for next year's shareholder meeting, you better get it in by December. And so what's the story here? Well, BankUnited is presenting a picture of a well-managed, steadily growing company. The focus on improving profitability, growing deposits, and managing risk all seem to be paying off. The company is clearly trying to align executive pay with performance, and they're engaging with shareholders to get their feedback. But there are a few things to keep an eye on. The company did not hit key performance metrics, yet they are still paying out at or near maximum. The other key factor will be continued execution. But overall, BankUnited seems to be on a solid path, focusing on sustainable growth and sound risk management. Thanks for watching Corporate Decoder, where we try to make the complex world of corporate filings a little bit easier to understand. If you enjoyed this video, please give it a like, leave a comment, and subscribe for more deep dives into the corporate world.